Hey everybody, I don't know if I'm going to trade again today, and I wanted to go over this while it's fresh in my mind. Um, First of all, I had an overnight position in, oh my goodness, GTSIF. Oh, hey, that's the first time I got it. All right, so I got in on this dip, and then in pre-market, I noticed that there wasn't a lot of action, um, even on the level two. Sometimes, sometimes the bid will start to come up and the ask will start to come up and no sales will go through. So you'll just see the dotted line, but you can see that the bid and the ask are going up, and so you can expect it to gap up. This one traded 2,000 shares at this price, and then the bid and the ask fell down, uh, way down actually. I think it was in the low 14s, and I did not like that action. So the moment the market opened, and I could have put an order in a little sooner, but I wanted to give it a split second to see what was going to happen. So I gave it the split second. No one piled in. I saw the bid getting eaten, and I limit ordered out well below the bid because I didn't want to be stuck in a panic, and I just wanted TF out. I managed to get out on the bid, which was at 13.6 at the time. It was like 14.1 when I placed my order, but then when my order filled, I got out at 13.6. So I took a little hit, an itty bitty hit on that, but I'm proud of how I ran the trade. I saw the writing on the wall and I dove, dived. Anyway, I'm still in CRIS with my puts. Bowen said that this was his favorite squeeze idea for this Friday, and I think that, it could be an afternoon squeezer. I have not added to my position. I've got those puts. I haven't added to my position. Although this might have been a good opportunity to. I don't know. I think this has the potential to squeeze this afternoon. And so I don't want to risk more than what's already on the table. I still think that this has a dump day coming because the volume keeps getting less and less, and this is not exceeding the average forecast for the first time this week. So it's exceeding the median forecast, but not the average. So with all this volume fading, I think it has a dump day coming this afternoon. If it breaks 825, I might get in and maybe pay for my puts with a nice push. Probably just take, whatever's given, but I really don't trust this volume to bring it up. I don't know who's holding this thing up. They're doing a good job though. I can't even tell where the key levels are on this thing right now. It's just such a mess. I mean, obviously 8 is going to be important, and then 9 is, so those are the key resistance levels, 8 and 9, and then the key support seems to be this 690 level. Don't think just because it breaks under 7 it's going to crash. They've caught it a lot of times, whoever they is. I think 690 is in this area here. And then you've got all this consolidation from the first day run. So all of this is stuff that any sellers are going to have to fight through if they want if they want a dump day. So just waiting. I have time. Just watching as data erodes my premium, my equity. I don't know even what to call it. But here, this, my friends, was the Disney day. So they announced that they're boosting their subscription fee by $1. They anticipate they're going to get like 300 million new subscribers next year. Something. They're looking to get more money. And they broke out to all-time highs. This is 20 years of Disney. Never been this high. And so, of course, me being the cynic that I am, I'm not thinking, oh boy, what a time to buy. No, I'm thinking, well, this is gonna come down. And so, right at the gate, it opened above pre-market highs, and it pushed just this little bit, and I grabbed a put. I was like, I don't think so, Mickey. And it fell down, and let's see what I do here. I think it's fair to say that I broke my rules a little bit. I didn't wait for the squeeze. I bought a far out of the money put, a deep out of the money put, and so trying to get the info up here. So I traded this thing too many times. I got it at 9:32. So right first thing in the morning, it fell down. Yeah, I got it when this push failed. It fell down. I thought I was betting on 160. It didn't get very far. And then I noticed that it was recovering, so I sold my put. I made $5. You heard it. I made $5. And then I bought a put into this push. Excuse me. And did I buy two? Buy. So I must have bought it into this push. I bought it into this push. So I got two of them, and it must have been on this run up, just averaging down. And then I tried to get out into this pullback, but I couldn't get out. I'm reading my chasing it down orders. So I said, okay, if it breaks this consolidation here, then I have to get out no matter what. And so I sold it here. I sold both puts for 10 bucks, and I lost $60 on that trade. And it hurt. It hurt a lot, and I didn't like it because it was so fast, you know, and I feel like I was convicted or whatever and it didn't pan out. But I was not done wrestling the mouse. Let's see, where did I get this one? 958. 958, I grabbed a put. I was still playing the same strike, which honestly, this was a lesson. You know, it was a good lesson. Anyway, so I grabbed the same strike right here for $9, and it looks like, and I must have been risking the high because when it pushed again, I sold out. I lost $1 on that share. No biggie. Must have been 4. And then I finally said, you know what? Why am I fighting the mouse? Like, don't fuck with Mickey. Pardon my language. But, you know, don't fuck with Mickey. So it was right in here, It pushed, came back down. Let's see, I can give you the exact time. 10:35. It must have been, yes. 10:35, I let it hold this support, which was a nice whole number. Grabbed 172.50 calls, and it pushed. I was up a pretty penny. I sold into this resistance here. No, it must have been this pull down here. Like a plebe, but I made 30 bucks back, so that was half my money. I thought about walking away from the table then while I was still up, but I was like, no, I want to do better. I can do better. I don't need to give up just because I'm struggling. So I'm going to stay at the table. I know what I'm doing. I can get this back. But then I recognized that I was still a little bit on tilt and kind of emotional. And so I did decide to walk away for a minute and let Mickey do Mickey's thing. Man, if I had kept that call, and that kind of weighed on me, I could have tripled my money, and that did weigh on me. And I think it factored into my decision when I said, look, I need to just walk away here. I need to just like get away, take a breath, come back with composure. And so I did that. And at 10:38, that can't be right. Right, when I sold my call, I flipped short, and because I don't know how big companies move. I've never traded Disney. I don't watch it. I didn't think that it would move like a penny stock, but today it did because it got so outrageous. Um, so I thought that, a 3% move was huge. I flipped short. It didn't pan out. I think I was risking right here because I was in and out and lost $6 on that trade. So that was 10:49. Must have been right here. I was like, you're too high. And it was like, no, I'm not. And I was like, okay. I thought about buying calls this whole way, and I was really bugging out. Up here, I was thinking about puts, but I was kind of a little shell-shocked from my loss, and I wanted to be strategic and make the right decisions. I didn't want to just be in and out all day. I wanted my snipe. So when it pulled back, I noticed this little guy here. I was waiting for a push to get short into. I saw this flag, and I really think, maybe it'll, oh, this is the 1 minute. I really think that these little flags are, and I mean, like tinfoil hat here, right? As Tim Bowen likes to say. I really think that these little flags are hedge funds communicating with each other, or algos or something. And maybe I'm being psychotic, but maybe I'm right. So let's see. I want to share this chart with you, but I can just do it this way. So these are Heikinashi. This is what I watch on the 1 minute chart. And let me see where I saw this flag on my chart. It was a red candle that popped up. Must have been this one. This one? That's weird. Anyway, it seemed significant to me. It was at 17,466 or 17644, and it seemed significant to me. I don't like how you can't change the colors in stocks to trade. I don't like the red and blue, it's oppressive. Anyway, so this seemed significant to me. So when it got here, I bought a put. And when it got here, I kind of was shaking in my little space boots, but then I remembered, like, trust the framework, and trust myself, and trust these little flags that I see. And so I did. Fortunately, I maybe should have added here. I did consider it, but I was already having trust issues. So it fell down, boom, and then it kind of recovered some. And so I sold it in here, and I got a lot of money for it. Let's see, I got 55 bucks, you know, on one contract. That's pretty good. If I had added in there, you know, maybe I could have doubled that. If I had waited through this chop, I definitely could have doubled it. You know, by the end of the day, who knows what it'll be at. But I'm really proud of myself for sticking to it, for walking away and taking a breath, gaining my composure, and then coming back and waiting for the right shot. And then for taking the meat of the move, you know, taking what was offered instead of continuing my fight with this thing. And I walked away profitable on the day. I'm green on the day. So I might keep playing, trading, whatever you want to call it, but I'm really proud of what I've done today. And if you're not familiar with the framework, I'll go over it really briefly. It's not mine to share so much, but Tim Sykes came up with this Pennystocking framework, and it's fascinating that it actually it also fits with the hype graph, which is a human nature, you know. This is how hype works with, like, new technology and stuff. So say there's a new technology that comes out and people are starting to hear about it, and you're going to have, first you have the early adopters who are gaining interest, and then they start telling their friends, and they start telling their friends, and then people kind of forget about it for a minute, and then all of a sudden it hits mainstream media and it gets hyped up. You can think about EV cars, Prius, computers, jetpacks, like whatever, just everyone's getting excited, everyone's got one, everyone's talking about it to their friends, and then people just kind of lose interest. The novelty wears off, and now everyone's got a Prius, everyone has an iPhone, it's whatever. But then it's still kind of a cool thing, and newer people hear about it and react to it, and maybe they go get one, and they decide they've fought the iPhone craze for too long. And then at some point an actual evaluation comes out, and that's relative to the market environment, right? Like a Prius was cool until Teslas came out. So here we are. And you can put a 7. Tim Sykes, give credit where credit is due. Tim Sykes put this on stocks trading. So every stock follows this cycle. There's where it's doing nothing, and then there's the ramp up, and then there's the run up, and then there's a cliff dive, and there's a bounce, and then the bounce fails, and then it fades into oblivion. Again, it's not mine, it's Tim Syke's. If you want to learn about this, then I'll put a link to his DVD in the description of the thing. I highly recommend it. If you're a challenge student, it's free. If you're a challenge student, you should watch, and you want to trade options, if you're a challenge student and you want to trade options, you should watch Mark Crook's Options Bootcamp, and then also watch the Pennystocking Framework Part Deux. And I mean, there's a lot of potential just with those two things. But also understanding that this is not just for stock trading, this is human nature. And since it's human nature, it's also the nature of the market. So that is freaking fascinating. And that is how I made money on Disney today. Thank you, Mickey. That is how I managed to stick to my guns during this short. It's why I cut my losses on the way up. It's why I should have trusted that call. But you never know where the top is. You never know where the top is. And so you gotta be wrong until, gotta be willing to be wrong until you're right, or something like that. All right, thanks for watching. Have a good day.